Hey everybody, welcome to Metals on the Move. My name is Gareth 𝗖𝗽𝗶𝘁 from VerifiedInvesting.com. Today I want to talk a little bit about uranium because we're seeing a big move in uranium continuing. I want to look at the technicals. Is this move just the beginning of a bigger move, or is it getting to a point where you have to be more defensive? So let's jump over here and take a quick look at the chart. And basically what we see here is this is a chart that I brought to your attention a while back. It had a beautiful wedge pattern. You notice how it kept hitting these levels. And again, really important to note here, hitting here, 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 and here. And as wedge patterns go, it even hit here before breaking out. The breakout has been a tremendous breakout. The thesis I gave when this was breaking out not that long ago was that we're not going to be able as a society, as a world, to kind of combat climate change without relying on uranium and nuclear energy. So that's the thought process here. So that thesis is still intact, meaning that over the longer term, uranium probably goes higher. But if you look at this move, this is a ridiculously extended move, and you're now coming into levels like this, right? So you're starting to get into past pivot points, which means there are going to be people here that bought in that are now getting made whole here, and they're going to start to sell. So this is the thought process. If you're long uranium, the recommendation, what I would do in my portfolio is start to take a little bit off the table. And then if it goes up to this high here, you take, again, this is a classic double top, you take more off the table. And the beauty of doing it this method, kind of dollar cost averaging in and then dollar cost averaging out or slowly unloading, is that you get to a point where you unload a little here. If it pulls back, you can rebuy using that same amount of money, but you already took the profits. If it goes up here, you do the same thing, take more off the table. And then if it pulls back, you can always rebuy at any level on the way down as well. So again, my point is this, uranium is longer term to me still very bullish. Shorter term, I think it's looking like it wants to pull back. It's getting into this kind of euphoria. I'm starting to see people in social media talk about it more and more, which usually is the end of a move before it pulls back versus the beginning. So that again would be something to look at. If we look at the URE here, let's take a look at the URA. And by the way, we were just looking at the URNM. This is now the URA, and much the same thing, right? This is the global uranium ETF. Notice the breakout, same exact chart, rally up here. We're right into this same level right in here where we're coming into good resistance. So same thought process would apply. Look for it to fade back down, essentially consolidate. And remember, consolidation is healthy for a chart. It needs to consolidate. It needs to digest the move before it can go on. And so for me, where would I look to be a buyer? I would say right in here, right? Huge little area right here. If this thing were to pull back, let's say to $24 to $25, you then reload the boat for another bigger move up to the double top up here. So that's your uranium analysis right now. What we have to look at here is how far uranium has rallied, the likelihood, the probability that it continues the move, or is it going to pull back? And based on this, again, just like I said, look for a little bit of a pullback to the key levels, then the next leg can start to the upside. Again, my name is Gareth 𝗖𝗽𝗶𝘁. This has been Metals on the Move. Thank you so much for tuning in. And again, come check us out at VerifiedInvesting.com.